Hello guys, welcome to the Trading Parrot, and as you can see, yesterday the market closed a little bit in the red. Some of the Magnificent 7 had some retracement, but today intra-candle pre-market prices are showing some recovery into Friday, and that could spill over as well into crypto. That's why we are going to look into the charts today. This is insane. At 4:30 p.m. ET, Apple reported stronger than expected earnings and a cash pile of over 132 billion. At 4:31, the Apple stock falls 5% despite beating the earnings, and then it rises 8% at 4:45, just 15 minutes after adding 320 billion in market cap and turning into green. Earnings plus AI roller coaster ride. We have something similar happening to Amazon, laying off 30,000 people and then beating on earnings so much that the stock gained $250 billion in 1 minute. Is all you need to know about what AI is going to do to society. And this is sad, guys, because AI basically taking all these people out of their jobs and then handing over this to AI. This is what I speculate that is going on. It could be that they are also constraining their expenses due to expectations of a recession. You never know, but it could also be that they are replacing positions of people with both robots that do the manual work and AI that do the office and organization work, in which case when you're betting on the stocks, you're basically betting against humanity. You're betting that AI will take over and we are all gonna run out of jobs, just looking at how automation does everything and just a few families have all the money. A little bit of doom for a Friday general market video, but let's call things for what they are. Ryan says that these are the best months historically for the stock market are almost here. And he's talking about this potential to get an average change of 7.1% being between November to April. That's higher than any other group of months. Something to note as well about Amazon is that despite the fact that it's a very strong quarter for Amazon, no doubt, but at the same time, Amazon free cash flow is collapsing. You can see it going from 52,000 in Q2 2024 into just 18,000 in just a matter of around 1 year. And this is attributed to the CapEx that is consuming a lot of capital. We can confirm that there is a liquidity stress at the moment and that is rising. You can see how we flip in here on the funding squeeze accelerating, biggest non-quarter and repo usage since COVID crash. That means that they are short on cash and overnight borrowing costs are rising fast. Liquidity is tightening as the QT drains reserves and treasury bill insurance absorbs the cash. Unrealized, in this case, losses on investment securities. We are talking about the US banks. They are now sitting on 395 billion in unrealized losses of Q2 in 2025. And we continue to see record breakings on the S&P, on the Nasdaq. It has never been this expensive. The index price to sales, PS, hit a 3.6 way above the 2000.com bubble. That peak at 2.1. We are getting close to be 2 times higher than the .com bubble ratio. The price book ratio hit 5.6, above the 2000 4.6. That's just 1 point higher, but still impressive. Forward PE is 26x. That's the second highest since the .com burst. The US money supply grew 4.5% over the last year, the biggest year-on-year increase since July 2022. After the brief hiatus, money printing is back. And king of charts, let's see how king he is calling for a collapse of 30% affecting the S&P daily. You can see that is pointing towards the April lows of 4.8, coming from 7,000 almost. And this is because it's forming a massive head and shoulder with a top. Oh, wait a minute. He's not just calling for a target of minus 30%, but also potentially to come back into 6,000 for forming a right shoulder. So this basically has a target of 2K below this neckline. So that means going from 4.9 should go to 2.9, which is just unbelievable. Let's see where we are in terms of the macro. Everything that happened so quick, let's just wrap it up with this slide. The federal rate cut odds. We got odds drop to 67.9 after Powell signals no guarantee. Let's go and have a look at that. Now we have only 64.8 in December and a whopping 35.2 chance of no change. Of course, that is gonna spook up investors because they were expecting a steady 25 and 25 and 25. But with potential fears about the jobless claims coming in, remember that once we get over the shutdown in the government, they're going to release all the labor market information. And if that is really bad, that could force the hand of the Fed. At the same time, we have Trump saying, do not worry about whatever Powell says because I'm going to remove him very soon. US-China trade war, yet they got some tariffs. There was a de-escalation as well. But in my opinion, I worry a lot more about what could happen with Taiwan. Let's talk about Taiwan just in a nutshell. There is a video in particular that contained a lot of information yesterday that I watched about Taiwan. I've been following what's going on there. In Taiwan, we have the Taiwan Semiconductor Manufacturing Company, TSMC. This is the world's largest contract chip maker. And if you were thinking that Nvidia were making their own chips, that is not the case. They delegate all of that to this company. Apple delegates everything to this company. Google and Samsung, all the companies delegate everything to this company. And this company is based in Taiwan. And there are some fears that there could be some geopolitical escalation from China to take control of Taiwan. If that plays out, which we have no clue if it's going to happen, things could shift very quickly into potentially being the pop for the AI bubble. Think about this. Overnight, this company doesn't produce chips. Then everything stops. The whole show of the AI, including Nvidia, Google, Apple, and all of them. Do you like your M1, M5 chips? Do you like your latest iPhone? Everything stops being delivered on time. There will be a lack of enough chips, and therefore everybody will be shortcut. All the AI will slow down if that happens, hypothetically speaking. Now, in Arizona, there is a plant and it's been progressing, but they are behind schedule. They are still not producing the top end of the chips that are currently required for the most advanced AI. And I think dominate AI, dominate the chain of production, and you are securing yourself, controlling the whole world for the next 100 years at the very least. So we are not talking about a joke in here. Yes, everything could be de-escalated, everything could take a U-turn, but in my opinion, ignoring what's going on with this is a little being too naive. A few days ago, pretty much everything in this table was bullish prior to the last week. And now currently we have everything a little bit more bearish, with the exception of the tariffs that is 10% and the jobless that fell 13%, because that increases the chances of the rate cut, not because it's a long-term thing for the economy. Of course, having less jobs is not good. It just forces the hand to get cheaper money. There's been a de-escalation also on geopolitical events in Middle East tensions, and that is a 6 out of 10. The shutdown continues, and we have still a vacuum of data that can be used for further manipulation in the market, further uncertainty, and elevated volatility in the markets needs to be assumed as for granted. And before we talk about what the Federal Reserve did again, if you want to trade in the markets, you can consider opening an account on this particular broker, which is called VT Markets. This is the one I'm currently using, and there is a link in the description. So if you use the bonus by using that link, you get 100% welcome bonus. This particular exchange, it's not an exchange, it's a broker, allows you to trade Forex, indices, stocks, funds, everything, including Bitcoin and crypto. And the beauty is that you can just go ahead and transfer crypto in and out of this broker, not like other competitors where you have to do it. You must do it with fiat, which is a great advantage, in my opinion, to make sure that you can flow your cash between crypto in and out at any point in time. So what happened with the Fed? Well, they accelerated decreasing their balance sheet once again. So we are now in between the extension of 1 to what 618, and we could accelerate even more if this trend continues and maybe take the low of January 2023. That's definitely not good for risk on assets. Okay, let's go and let's do some TA. That's why we are here. The DXY continues, and potentially it could close with a breakout in here, accelerating into the target of 58 RSI. That could bring it back into above $100. Being above $100, guys, people are gonna see this pattern. The small double bottom is visible. The larger pattern in here is gonna be even more pronounced above the multi-year support trend line that spans from around 2010 into here. So if that becomes support, we could extend the rally maybe into 102, 105. That's definitely, again, not good for risk on assets. Gold got stuck in this area in here, pinched the low of 3893 this week, but is bouncing off that support and reclaiming $4,000. The support on the weekly is currently located at 3.8, and the support on the monthly is currently located at 3.7. So that is an area of confluence that ideally gold wants to defend. But look at this, we're closing today, the candle like that is still a bearish pattern, even if it's green. If we could close it tonight in the red, that will be a lot more of information for traders, particularly on the monthly. The VIX continues to just go sideways. I am still looking for an expansion. Nasdaq puts new all-time highs, and S&P does as well. The pre-market prices on the S&P is 685. 5 to 6 points above the close yesterday. That basically puts it back in the green if we hold this way today. And the Nikkei has finally managed to pierce and conquer the level of 80, currently at 81. That means that we might have still some momentum to complete the technical target, which is 53.8. Google has managed to reclaim on a weekly basis. Let's see how we close today. We have pre-market 283, but this is basically defying the revenge rally and going potentially for a new high. Let's see if it can go beyond 81 and maybe put a further all-time high. Apple is still above support, so it's still in the rally, and pre-market prices is 6 points above it, so it's pretty much undoing the damage that we saw yesterday. This could and it should spill over into crypto in some way, at the very least, to maybe take the 110K and stay there for a little while. Remember that we've seen the general markets currently outperforming crypto. General markets are acting with fear, putting new all-time highs, but in the context of fear, because that all-time high is affecting the 7 magnificent, but not the rest of them, which tend to have more red days than green days anyways, and that's why AI is swallowing the whole S&P 500. Nvidia continues to be in the area of the breakout out of the descending channel, signaling that potentially this is going to continue in the bubble territory. It's challenging the area of 73. That's a pretty difficult word to say. I don't know. I cannot talk fast and say challenging. Try. You can try at home and write down in the comments what is the most difficult word in English for you. AMD, again, with pre-markets 5 points above the 254, maybe getting into 260, getting very close to the revenge rally area. Amazon, despite the fact that it did great yesterday, it couldn't break above the 60, so we still don't have a breakout from this cap and handle. It just pierced the resistance of 60, but it got rejected now back down to 222. Pre-market prices is 253, so we could be seeing a breakout above the neckline. That's pretty cool. Look at that. We had that neckline. We were calling for completing the cap and handle. The tradable area is 215, but if you are a trend following trader, you can take the breakout of 233, but now you cannot because pre-market prices is almost 1/3 of the target into 312. Tesla pushed up above the double top but got rejected back down. Pre-market is 446. Let's see if we can take out all these hive signals and bearish elements right there. Palantir is gonna face resistance very soon. The pre-market is 199, so we'll see if we can break out from there. Microsoft is continuing with this double top, not yet being able to continue to the upside. Meta pre-market prices is 669 over 666. But this particular pattern with a neckline at 671 is looking bearish. If we break this neckline down below, we are going to get into the low 500s. MicroStrategy accelerating the breakdown from support. GameStop potentially getting into support at 40 RSI, and Robinhood not yet putting a lower low, so we don't have yet confirmation that this won't be able to do a new higher high. And indeed, we have pre-market prices 141. Guys, thanks so much for watching this video. I'll see you in the next one. Take care. Bye bye.